Hello and welcome to another mining podcast with me, Paul Harris, and Joe Mazumdar. Good afternoon, Joe. Happy
Good,
2022.
good afternoon, Paul. Yeah, this will be the first one of a new year. How's it going?
All going well. A bit of a slow start to news this week, but seems to be picking up. A lot of things to talk about. Obviously, starting a new year, so everybody's starting the year very positive, looking forward to better things to come. Metals prices have had a bit of a mixed start to the year, but let's talk about what it's all about. Money at the end of the day, and last year, 2021, was actually a good year in terms of mining companies being able to raise money in the capital market. So why don't we start there?
Yeah, I mean, we saw a big increase in financings for junior and intermediate companies, according to the S&P Global Market Intelligence. 30% increases in gold and base metals, but more of an increase in specialty commodities as well, driving that those exploration funding going to juniors and intermediates, and juniors are obviously using it for exploration. Looked at that for the subscribers in the first letter of the year just last week. What we also tried to look at was, not only where was the money going to, which companies, but interestingly, how they were spending it and which commodities they were spending it in. And there's some interesting trends in there that the question is, do those trends continue into 2022?
Well, looking at the data and some of the data you published in Exploration Insights, the last issue, gold was a big beneficiary of fundraising last year. There was a big window opened up for quite a long time. So I think 59% of the funds raised were for gold last year.
And you're getting the majority of exploration budgets, uh, you know, uh, 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 for a long time, and because juniors tend to prefer gold because it's easier to explore for. Copper projects and some of these other ones require a lot more drilling to upgrade, and so gold for them is easier, and juniors prefer that. And also the retail market has a tendency to prefer gold over other commodities, so it's an easy one to sell. But what we saw last year was, more being allocated to base metals into the battery metal market, and especially commodities like your lithiums and that. And that's really the question: is that in 2022, is that trend going to continue? Like, will the sort of, and I won't say apathetic, but right now, not a strong sentiment for precious metals translate into a financing risk for these junior gold companies, such that it might be easier for these other companies to raise money rather than the gold or silver juniors.
Well, let's dig into that a little bit more. I mean, I think there's the potential that there, for want of a better phrase, maybe some gold fatigue out there. Paradigm Capital put out a research note, I think it was this week or last week. The gold price fell 4.4% in 2021. The overall gold stocks fell about 7.4%. Sorry, the senior gold stocks fell
Yeah.
7.4% overall. The intermediates share prices lost 16% on average. Junior share prices were down about 20% on average. So it's, last year was a tough year for gold stocks.
Yeah, well, the thing is, with if we dissect that with the majors and anybody into like bad gold price, I mean, we're not talking about when gold price went down to $1,000 60, when it went from 1980 down to 1060, in the last cycle. We're still at about 1800, and it seems to be holding out. The question is, if interest rates go higher, what's the impact on real rates while we're having this issue with inflation? For a company that's producing gold, if gold stabilizes at about 1800 or sits in that window between 1700 and 1900, the problem is their costs aren't sitting there. Their costs are actually going up. Labor, energy, everything's going up for them, and so the forecast is for more of a shrinking margin. So that's on the operating side. But I mean, if you're sustaining capital, your development capital, and what we talked about in the last session about, with Magino, are we going to see capital escalation as well? And so your development decisions, or if you're already in development stage, that's going to be another thing for these gold companies and any of these companies really to look at. But with a copper company or a nickel company, they might find it easier to get funding because in the end they're producing a commodity that that a smelter wants, that a car company wants, like whomever wants, and such that they might have more access to financing than maybe a gold company.
Well, let's look into that a bit more, Joe. Last year, we saw, specifically in the second half of the year, we saw quite a few transactions in the copper space and the battery metal space, both with bigger companies, people such as BHP and Wailu, sort of trying to buy smaller companies, but also downstream companies in the sort of battery metals chain looking to get into raw materials production, noticeably with companies out of Asia, specifically China, getting into the sort of lithium space, the lithium brine space in Argentina. Last year, we also started seeing the emergence of a number of new copper exploration juniors, and there were several IPOs. Got some numbers here. Hot Chili raised $34 million Canadian in December with its Toronto Stock Exchange IPO. Solis Minerals in Australia did an IPO, 5.5 million Australian. Arizona Sonoran and Copper IPO'd in November, raised, let's say, 47 million Canadian. Other financings, Libero Copper upsized 8.3 million. American Pacific Mining oversubscribed placement of $10 million Canadian. There seems to be a lot of money becoming available for copper and copper exploration.
Absolutely, I would think that, but I would say that probably the investor base that's in that the retail sector that would be investing in these juniors for copper and lithium, let's say nickel, and that it's still a smaller base than for precious metals, especially for the gold sector. And so even if that grows, that would be hard to compensate a significant fall with the gold sector, because some of these retail investors want anything else but gold juniors. So, if we have a drop off of gold juniors, the amount of that translates as, oh, not gold, let's go into copper. I don't know if that's a 1-to-1 ratio, if all that money is going to go into copper, especially in the retail sector. Institutional, potentially, but if you have an institution that only runs gold, it'd be harder for them to switch to these other metals. But I think the access to financing from other venues as well is better for base metals, like the ability for a development company to get a smelter offtake agreement, for them to find financing of their development company because they're producing copper nickel much easier, I think, than a gold development story right now.
Okay, so with the start of 2022, looking ahead, the outlook for gold is perhaps more at the moment for more of the same. What we saw in last year. Stagnant in some ways. The outlook for base metals and copper, battery metals looks positive. So, where would you expect money to be raised this year, both in terms of the type of metal and also sort of jurisdictions?
Okay, so I would say that the overall financing, money that we saw being raised by these juniors will probably fall mostly because of gold. So that trend will probably be going down in 2022. And then when we see the allocation, what we're going to see probably is more money going, a higher proportion. Some of that will be because gold is going down, and base metals, even if it was the same, would be a higher proportion. But base metals, copper, nickel, we'll see, lithium. A lot of these battery related metals definitely sound sexy to people. And so there'll be a lot more money going into that. And then jurisdictionally, the trend was last year's for very low jurisdictional risk, whatever that means. But Canada, Australia, the US got the majority of the money. And so is that trend going to continue? I think probably will continue. What was also interesting in South America was how we were changing because of the geopolitical changes in South America, that basically now it seems like the most right wing president is actually in Ecuador. Yeah. So Chile has now got a new left wing president who was a former student. I think he's 35 years old. We have Castillo in Peru. We've always have the left wing in Argentina. We've got a right wing person in Brazil, but a bit unstable. So we've seen Brazil heavily metal endowed. We've seen Peru heavily metal endowed. Chile, obviously heavily metal endowed, go down in terms of exploration expenditures directed to these countries versus in Ecuador and Argentina. And most of Ecuador and Argentina, I would say, is leaning towards into lithium. And so their growth and exploration has been leading to these non-precious metals sectors, and Peru and Chile have been going down because of the idea that, oh, hey, we're going to raise taxes. And so if you're a junior going in there and the majors are sort of pulling back their investment ideas, like Yanacocha with Newmont, I believe Cerro Verde with Freeport. So if they're sort of deferring the exploration, I'm sorry, their development or
Expansion.
operational expenditures going forward, then that implies that, oh, who's going to take me out? Who's going to come and invest or help me look for the because looking for some of these base metal projects takes a lot more money than some of these gold projects.
Okay, but it seems people I've spoken with, Castillo in Peru hasn't been as bad as people perhaps feared. I'm getting the message out of Chile that although Boric is more left wing, he's got a sensible head on him. If he wants to fund his social programs, he's going to need the mining sector and mining sector income. So he may raise taxes, but he's not otherwise going to necessarily meddle too deeply there. So it all seems to be things that the mining sector can and will take in their stride. So, with travel slowly starting to normalize, and with copper demand sort of going off the charts, can we expect to see Peru, Chile, etc., really start to sort of uplift on their copper exploration?
I would think that we should see that, but the problem is perception. It's not reality, really. It's like what you're saying might be what happens as people realize, who's in this guy's, going to be helping him in Chile, and what kind of advice is he taken. That's going to basically be figured out over the next 6 to 12 months, and that's when companies will start considering whether they're going to make those billion-dollar decisions anymore. But in Peru, we've seen this guy. We've had him here for about 6 months, and we've seen what he's been doing. And you remember we had that article about Bear Creek and the locals at around the Corani project going to the presidential palace and then saying, hey, we want this project, which is all great. But then Bear Creek turns around and buys a Mercedes mine in Mexico. So what signal is that sending to the market, saying, okay, looks like the locals are supporting your project. The management's focus should be on developing this, multi hundreds of $1 million silver project in Peru. So why are you going to buy this? For me, I mean, I covered it under Premier. It's been a pretty marginal underground project in Mexico. Why would you buy that? So, I mean, that's sort of suggesting to me that, oh, maybe it's not all hunky dory down in for Karani, because it's not only the locals there right around the project that matter. It's downstream, and from what I gather, I mean, the downstreet are the Aymara Indians who are around Lake Titicaca that don't want the project. So yeah, so I'm seeing different signals, in terms of what's going on. But what I see is that, which one thing that doesn't change, and is if the population, whether they're right there or downstream, don't want the project, whichever government we're talking about, it's going to be hard. It's going to be as difficult as it has ever been to build these projects. So, regardless of if you have a left wing, right wing government, if the locals are supporting you and you're doing all the right things, there's a high probability you'll get the project built. And that's your really biggest risk mitigation. Like what we just saw in Argentina. Argentina's seen M&A in the lithium space, and so there's a lot of exploration going to the lithium in northwest Argentina, where I used to work in Salta, Jujuy, those areas. Are thought of pretty well, and we've always known that Argentina is provincial; it's not federal. Santa Cruz is good, San Juan is good, where we see the Jose Maria consolidation with Lundin Mining. We know Mendoza is not good, and in Chubut, we saw them saying, okay, we want to have a new zoning law such that Pan American could basically build their big open pit Navidad project. 1 or 2 days later, they repealed that law because the people, granted not living in that area in Gastre, decided they didn't want that project. Not decided, they'd always said that, but they were against that new zoning law. And so these situations will continue regardless of who's running what. And in Chubut, that governor was in favor of the project, but that still hasn't, brought that project forward.
I think, as an aside, there we can also comment that it does seem to be the case that oftentimes miners and developers um, underestimate perhaps the area of direct influence in terms of communities. They draw their perimeter, and the communities outside of that perimeter often want some of the benefits. They want to share the benefits, and they certainly don't want to share all the negatives, all the costs or impacts.
Exactly, because they
Um,
don't get all the benefits. It's that like let's take Alaska and let's look at something like Trilogy and the Alaska state government is basically permitting that access road from the Dalton Highway to the Ambler District, where Trilogy and South 32 have their Arctic and Bornite projects. That was a right of way that was provided to them from years and years ago, and now they're permitting it. And it's not the native corp nana that's right there at the project that are sort of delaying it right now. It's those ones that are along the road that live these subsistence hunting livelihoods that are questioning the road because, hey, are you going to grant it public access? Because we don't want the public gaining access to this area. So, what assurances do we have that that's never going to happen? So, that might require more work on their part to make sure that these people are, not only get the reassurances that they need and potentially get compensated as well, which maybe under the law they don't need to. But if they really want a sustainable relationship with these people when they're driving concentrate trucks back and to the Dalton Highway and then building stuff back up, they're going to need these relationships, and that's really behooves the state government, which is a proponent of the road, to do the right thing. And I don't think it's an NGO thing in the end. It's that sort of local. If you've got those local native corps and those groups on your side, no NGO could basically derail your project.
Well, roads certainly can be a contentious issue. The MNG's Las Bambas mine, which I think 40 or 50 days blockade shut last year because of road protests and communities. Okay, well, let's sort of draw to the end here, and I'm going to put you on the spot.
Oh,
Forecast for 2022. Give me a forecast of something.
forecast. Well, it's snowing here, and I figured it'll snow for weather. Not
Something
weather.
mining related, please, Joe.
Something mining related. Okay. So I think I could sum up what I think is going to happen with the exploration trends going forward. Okay, so all these companies that raised all this money, we've had delayed results, and now those results are coming out, and so we'll see in the first quarter, in the first month or so, how that's translating in terms of their ability to get money. And I think what's going to happen is scale is going to be very important, continues to be very important. It was important for the mega mergers, but now that scale issue is going to go down, such that these companies have to go up and they have to consolidate, get bigger scale, to basically access money. Better liquidity, more projects, better management teams, and I think we're going to see that continue. And that M&A might not reap you a 60% premium or anything. It might still be these merger of equals sort of things, but it'll give you that scale. And I think scale is very important going forward, and that will get you better financing. And so the little junior that thinks he can, that'll be harder to do. You're going to have to get a little bit more liquidity, and so hopefully that'll reduce a lot of the noise with the 1,600 junior miners that are out there and give you more quality to pick. And that might be in the gold sector, base metals, lithium, what have you. And I would hope that that would be something that we could see coming out on the other side, because the amount of financing that we saw last year allowed everything to get funded. I don't think that'll be the case this year.
Yeah, it doesn't seem to be too sustainable. And in line with that, I think it's worth noting that yesterday the shareholders of Calibri and Fiore both agreed to the proposed merger there. Isn't
Yeah,
that
and
what we
I
talked
think
about?
that
Yeah.
that makes sense and gives you a bit of diversification, gives you more liquidity. And I think all companies are looking at that. They don't want to be labeled like, "Hey, I've only got assets in Nicaragua" or something like that. Suddenly, I can't have access to this capital. So, if you've got a good operating team, they can work in multiple jurisdictions. They would be the consolidator, and I can see that happening. That the good management teams will be able to be backed to consolidate.
I think also Calibri just put out their 2021 production, and what's it, 250,000 ounces? It was huge. Um,
Yeah, I didn't look. I didn't look, but I noticed that, quarterly that they done a really good job with their hub and spoke model. And Darren Hall, that I used to know when I worked for Newmont, is a great operator. And I met him again when he basically helped Newmarket consolidate all the different operations that Crocodile Gold had in Australia, which ended up being the flagship Fosterville project, and they were just discovering that non-refractory, high-grade antimony-related gold mineralization at that time. So Darren Hall for me is a great operator. So I'm really not surprised that they've done a good job there.
and let me just correct that number. Their production was 182,755 ounces. So good job there. Cool. Okay. Well, I think that sets us up for the year ahead, Joe. I imagine we're going to have a lot of interesting things to talk about as the year progresses. So happy New Year. Hopefully, you have a successful and prosperous 2022, and we'll do another mining podcast again in a week or so's time, a couple of weeks time.
Great. Thank you very much, Paul. We'll talk to you later. Happy
Cool.
2022.